Good afternoon, everybody. This is Steve Kay of Cattle Buyers Weekly with some comments on the cattle on feed report just out. As you may have heard, the March 1 on feed number of 11.228 million is 94.7% of year ago. Marketed in February happened to be the same percentage, 94.7 at 1,682,000. And placed in February, which was the slight surprise of the report, 1.678 million head, 97.4. And I think most people would regard the report as neutral to slightly positive. That's about as balanced as you can get. But February placements, as I mentioned, were below a year ago and 3.3% below average forecast. So that's what put the cattle on feed total just below expectations, about 0.6% below expectations. February marketings, though, were about 0.8% below year ago after taking into account one less slaughter day this year that you'd add 4.5% to that marketing number. So again, cattle feeders didn't really market enough cattle for the third or fourth month in a row, and I'll make another comment on that in a moment. But the lower placements largely reflected the extremely negative cattle feeding margins that we had during the month again. And I found it interesting is that the weight breakdown, contrary to what we heard about exhausted wheat pasture and heavy cattle coming off those pastures, is that cattle feeders still placed 35% fewer cattle than last year in the 700-pound and over category. And that category totaled 973,000 compared to 1,008,000 last year. Now that 973 was just by pure coincidence the exact same number placed in this category in January. The under 700 category saw 10,000 fewer cattle placed than last year. Also of interest, of the major feeding states, Texas and Nebraska placed fewer cattle in February, but Kansas and Colorado placed more. In fact, Colorado placed 23% more, which put its cattle on feed total at 99% of a year ago. Now, back to those marketings, they continue to be reflected, I think, the slower marketing rate, reflected in two ways, or three ways. They're reflected in the low slaughter. The slaughter this week came in at only 607,000 head, with virtually no Saturday kill tomorrow. And then secondly, of course, the weights, steer and heifer weights, continue to be 25 and 26 pounds above year ago on a carcass basis. And thirdly, the grading is just nothing short of phenomenal. For the week ended February 28, cattle graded 63.24% choice. And that's the first time that percentage has been above 63 since USDA began its data set in early 1997, and only 27.85% graded select. And that's the reason, again, and main reason, as well as soft demand for choice beef, why the choice select price spread inverted by 19 cents yesterday, and it looks like it's gone back to being slightly in choice's favor today. But all in all, the industry's really not quite marketing enough cattle, but it's very difficult circumstances to do so. That's it for this month. Thanks a lot. Goodbye.